Welcome back to Family Investment. In fact, it should be welcome me back because I've been missing from the investing scene on YouTube for quite a few weeks now. I'm taking a long break. I'm getting a bit spoiled here. But before I begin, I would like to say a very happy New Year, or very happy Lunar New Year 2022 to everyone celebrating in the Far East. And also, most importantly, it's the year of the tiger. You have the tiger. You need to be resilient in this market condition because at the end of the day, we're in for the bull market, and that we need to be the predator, hunting for the great quality stocks. Where have I been? So I've been really busy with priorities like family stuff, getting the house sorted in order. So recently, a couple of great celebrations. My daughter was in the Scottish Ballet Nutcracker show, so we've been busy touring with her, and she's done really well. And what impressed me is she's not only done well, but she's also on the cover of the Royal Ballet. She's a really good dancer, so I'm really proud to see my little baby girl grow up. I'm sure as parents that you guys are watching, every moment that you want to cherish with your family members, it's really important. So that was a highlight of my last few weeks. Again, back to the investing scene. January has been crazy. February is starting off crazy again, and you can see the market up 20%, down 20%. But today I really want to recap on my views on where we are really quickly, and 3 key things I really want to share. So the first thing is, overall, I'm still standing firm that I am bullish overall for the year 2022. The first half will be a bit torrential, it'll be a bit monsoony, but I think overall the Nasdaq, I only focus on the tech. The Nasdaq, I'm still looking at a good growth of 10 to 14% on the index alone. So selected stocks will be doing well. So as you can see on the Nasdaq 100, I know that the likes of PayPal has not been doing well. Facebook, Adobe will get hammered. So these are the stocks may move down further from the Nasdaq. But then again, remember, we got the semiconductors who will be shining. They will be like the oil stocks for the FTSE 100. They'll be climbing the ranks. You can see Amazon, Apple, Microsoft all doing it. So the Nasdaq overall bullish. Take this as an opportunity to consolidate, to buy in the dips, buy on the dips. Take your time, no rush. That's all I can say. I'm still bullish. And second thing I want to say is I may be wrong. I may be wrong about ignoring the VIX. The VIX indicator was great in 2021 because volatility was strong in the beginning, but it's an indicator when to buy. But now the VIX is coming to play again. So I just want to reiterate, use the VIX, okay? When I say use the VIX, wait for the VIX to head over 24 and then start buying. If the VIX is not at 24, do not buy. If the VIX is between 20 to 24, just relax and chill, neutral. Try to get your strategies right, your buy triggers right. Only sell when the VIX goes below 20 because at the end of the day, we want to see the VIX at 15. But now it's volatility period. It's not the time to sell. It's only selling when it goes low. But now above 24, you buy. Don't wait until it's 23. Don't wait until 20. Buy those great quality stocks. Be selective. Not every tech stocks will do it. Be selective on what you are. So hopefully over the next few weeks, I'll cover each and every stocks after the earnings and hopefully give you my point of view on what I decide, and then you can go and do it. And the third thing I really want to share with you is I'm still a tech investor. You're still tech investors, but it's okay to buy some non-tech stocks. Okay, I've got a couple of them I just want to share. I may have repeated this in the past, but I just want to share. It's okay to buy some. I've started buying some non-tech stocks, not just to protect myself, but the other avenues of growth. So for example, I like Berkshire Hathaway because it consists lots of Apple, lots of financial, and it's very offensive. And in fact, Berkshire Hathaway has now outperforming a lot of stocks in the last 5 years. So Berkshire Hathaway, BRKB is one. If you want defensive, you want some growth, big huge war chest, Berkshire Hathaway. The other one that I like is Goldman Sachs. I bought already some Goldman Sachs. I'm hoping the interest rate rise will benefit the banks. But if you don't, you like JP Morgan. It's the other one I like. The edge over JP Morgan is the fact that they have their own stable coins. They're more into blockchain technology. They're more into the crypto scene. So I like JP Morgan, but I've selected GS, Goldman Sachs, because of their high growth potential. And lastly, I still like the luxury stocks because the NFT plays is great. Louis Vuitton, LVMH, check the chart here. Any signs of inflation hit? Any signs of degradation? No. LVMH is strong. LVMH may go into the NFT scene soon. And the other one alongside LVMH, which I've said in the past, is Ferrari. Ferrari has just announced on Twitter that they may be going to the NFT scene as well. That is crazy. It's going to start doing digital boom growth. So what are they going to pluck off thin air to sell to people for millions of dollars? We don't know, but that's how people are generating revenue in NFT. So these are luxury stocks, bank stocks, BRKB are the ones I like. If you don't like the tech stocks, it's okay to buy a bit, not go into majority. So this is my recap and view of the market. But for the upcoming videos, I'll be focusing on individual stocks post earnings. So the next 3 up videos, I'll be talking about Amazon, Facebook, AMD, are they buy or not buy, and how the earnings and what I see from my point of view, which I think to help you supplement your research. Other than that, remember to join my free Discord channel before I've opened it up again for the next 300 places, limited for only 7 days. So if you missed that, I'm so sorry, but this will be an opportunity for the next 7 days for you to join. And also my Patreon channel is still open. That's where I've been speaking to my Patreon members regularly during this absence, because it's easy for me to type in share, and also my personal investment journey. Thank you very much. I hope you like and subscribe, and I hope to see you soon for upcoming videos.
I hope you enjoyed that video. Check out our website link below. More videos up here.